we'll first finish the last bit on contracts. Then we can look at 2 illustration questions. Then we see how it goes. So there was this bit we were to finish. We have done part of it. So the next part we were to look at is revenue and expense recognition. So revenue and expense recognition. We want to introduce the percentage of completion method. Revenue and expense recognition. Revenue and expense recognition. So we say where the outcome of a contract can be estimated. Where the outcome of a contract can be estimated. Where the outcome of a contract can be estimated reliably. Where the outcome of a contract can be estimated reliably. Where the outcome of a contract can be estimated reliably, the contract revenue and costs. Where the outcome of a contract can be estimated reliably, the contract revenue and costs are recognized. The contract revenue and costs are recognized. The contract revenue and costs are recognized by reference. They are recognized by reference. To the stage of completion. By reference to the stage of completion of the contract activity. The contract revenue and costs are recognized by reference to the stage of completion of the contract activity. This approach is known as the percentage of completion method. This approach is known as the percentage of completion method. This approach is known as the percentage of completion method. Is known as the percentage of completion method. The stage of completion of any contract can be determined. The stage of completion by any the stage of completion of any contract can be determined as follows. So we can use formulas. For example, A, the most common, is cost to date. Cost to date, we divide by estimated total cost. Then you can get the percentage first or multiply by the profit directly. For B, you can use value of work certified. Value of work certified, you divide by contract. Contract price, you multiply by 100. In our units, units completed to date. We divide by estimated total units. Be produced. Then multiply that by 100. So those formulas can give us the percentage of completion So the first formula is cost to date. You divide by estimated cost, total cost you multiply by 100. Then your value of work certified, you divide by contract price, you multiply by 100. Then you have units completed to date over estimated total cost to produce. So any of those three formulas. Then lastly, we look at how do you determine, so determination of estimated profit of a contract, determination of estimated profit of a contract, determination of estimated profit. Of estimated profit of a contract. Determination of estimated profit of a contract. So we'll have some kind of a statement here. So look for the contract price. As costs it certified, when you have estimated cost of completion, this will give you the contract profit. So you have contract profit. Then you can get the percentage of completion. Say some percent. And that will give us profit recognized. So profit recognized will be that percentage multiplied by the x-axis. You have the percentage of completion, you multiply by the x-axis, then you get the profit recognized. So look at last sitting, there was a question on contract. So last sitting is December 2022. Question 4. December 2022, question 4. We're going to look at question 4B of December 2022. But we can as well discuss A, there's no problem. So A says the African Growth and Opportunities Act, or AGOA, is a USA. So that comes under the topic of cross-border trade, cross-border trading. So this agreement signed that maybe reduce duty or taxes to enable trading between countries. So the African Growth and Opportunities Act is a USA Trade Act enacted in the year 2000 as a legislation that significantly enhances market access to the US for qualifying sub-Saharan countries. Kenya is included. Kenya specifically has been allowed to export textile products to the US. Analyze 3 conditions that the above countries must meet in order to qualify to be eligible for AGOA considerations. So you can put down the conditions to qualify for the AGOA consideration. So conditions to be met by a country, conditions to be met by a country, conditions to be met by a country to qualify, conditions to be met by a country to qualify for AGOA, conditions to be met by a country to qualify for AGOA, conditions to be met by a country to qualify for AGOA is capital A, capital G, capital O, and capital A. Then you say the country must have established, the country must have established, the country must have established or is making continual progress. The country must have established or is making continual progress, or is making continual progress towards establishing, or is making continual progress towards establishing. Put a column, the first bullet point, a market-based economy. A market-based economy that protects, a market-based economy that protects, a market-based economy that protects private rights, comma, incorporates open rule-based trading, incorporates open rule-based trading system, incorporates an open rule-based trading system, incorporates an open rule-based trading system, and minimizes government interference in the economy, 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 such as price controls, subsidies, subsidies, price control, subsidies, and government ownership of economic assets. And government ownership of economic assets. And government ownership of economic assets. Government ownership of economic assets. Next bullet point, the rule of law. The rule of law. The rule of law, political pluralism. Pluralism. Rule of law, political pluralism. Political pluralism. And the right to due process, and the right to due process and a fair trial, and the right to due process and a fair trial, and the right to due process and a fair trial, and equal protection under the law, and equal protection under the law, and equal protection under the law. Next bullet point, the elimination of barriers. The elimination of barriers. The elimination of barriers to USA trade or US trade and investments. The elimination to barriers to US trade and investments. The elimination to barriers of US trade and investments. Next point, economic policies to reduce poverty. Economic policies to reduce poverty. Economic policies to reduce poverty. Increase availability of healthcare. Increase availability of healthcare. Increase availability of healthcare and education opportunities. Increase availability of healthcare and education opportunities. Expand physical infrastructure. Expand physical infrastructure. Expand physical infrastructure and promote. Expand physical infrastructure and promote the development of private enterprise. And promote the development of private enterprise. And promote the development of private enterprise. Next point, a system to combat corruption. 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 Probably leave it like that. A system to combat corruption and bribery. A system to combat corruption and bribery. Then the last point, the last bullet, protection of internationally recognized workers' rights. Protection of internationally recognized workers' rights. Protection of internationally recognized workers' rights, including the right of association. Protection of internationally recognized workers' rights, including the right of association, right to bargain collectively, right to bargain collectively, right to bargain collectively, and prohibition on the use of, any form of forced labor and prohibition on the use of any form of forced labor. Any form of forced labor. You can also put this: a country does not engage in activities that undermine. A country does not engage. A country does not engage in activities that undermine U.S. national security. That undermine U.S. national security. U.S. national security and foreign policy. And foreign policy interests. And foreign policy interests. And foreign policy interests. And lastly, does not engage in gross violations. Does not engage in gross violations. Does not engage in gross violations of internationally recognized. Does not engage in gross violations in internationally recognized. Does not engage in gross violations in internationally recognized human rights, in international recognized human rights, or provide support, for acts of international terrorism, or provide support for acts of international terrorism, or provide support for acts of international terrorism. So that's the A part. Then we look at this other B. It says Mjengo Contractors Limited is a resident firm engaged in the property development business. As of January, the firm secured 2 construction contracts, namely contract X and Y, which are to be completed within a period of 2 years. The information relating to the contracts is as follows. So contract X and Y. Gross contract price, the gross. Direct costs incurred in the year 2021. You have cost of materials, you have labor cost, you have consultancy fee, subcontractor fee, other direct costs. Additional information, contract X material costs include material costing 240 that remained in the site last year, as at that this year, as at the end of the year, balance at the end of the year, 31st December 2021. While contract Y, material cost costing 300 was sold during the year. 2, the company estimates that cost to be incurred to complete the contract work will be 150% of the contract costs incurred in the current year for both contracts. Okay, the company computes taxable revenue on the basis of the percentage of completion method for the 2 contracts. For analysis of general and administrative expenses for the years as follows. So office salaries, renewal of construction license, pension contribution, billboard costs, and billboard erection costs, purchase of computers and software, of which software cost amounted to 30,000, depreciation, subscriptions due to contractors association interest on overdue loan, legal cost on defense against claim of breach of contract, rent for the office premises, utilities, other income received by the company included interest income from Upland Bank, Dividend income from Lima Cooperative Society, royalty income net of tax, required compute the total taxable income from Jengo Contractors Limited for the year ended, compute the tax payable within by Jengo Limited. So we'll prepare a statement that will enable us to get the taxable income. So let's prepare a statement that will enable us get the taxable income. So the company is called Jengo. Jengo Limited. So the first part, the examiner wants the statement of total taxable income. So we have these contracts. We have contract X. Be too small. So this is X. Then we have one. So we'll start from gross contract price. So in thousands of shillings, this is 22,500. So 22,500. So we'll charge direct costs of the contract. we'll say less. First, we have material cost. So material cost incurred for the year for contract example is 2.5, but we have adjustments. Kuna adjustment, look at note 1. Contract X material cost increased material cost in 250 that remain. That was balanced at the end of the year. So you'll take 2.5 minus 240, while under contract Y, material costing 300 was sold during the year. Even material sales now tutatoa, sindio? So that would be all. So 2,500 tutatoa 240, sindio? So 2,500 there's a balance carried forward of 240. We remove that, and we are left with 2260. So kuna materials. I think I'll wait 2 more space there. Let me just make some quick adjustments here. This is X. This is 22. This is 20. This is why. So this other one was materials. These are the direct costs. Materials, we've subtracted 240 and we're left with 20%. For the other one, materials is 180, then you are told that 300 was sold, so 180 minus 300, tunabaki na 15. That's materials. Then we have direct labor. Direct labor does not have any adjustment. So just say direct labor. So direct labor cost ni 2 million. Direct labor cost na ingine ni 3,600,000. Direct labor consultancy fees. Here haina adjustment, hakuna adjustment ya consultancy, so just charge consultancy. Consultancy fees will charge 300. Subcontractors fees or subcontracting. Subcontracting fees is 1420. Other costs are still direct. Other direct contract costs. Other direct contract costs in 34.5. And 45.5. So after you charge direct cost, you get contract profit. That's from there, direct expenses. Then we go to the next part, which will be the P&L, where we can now charge other expenses that are not direct. So these are direct costs that are attributed directly to the contract. So we'll add this and deduct. So we'll add this and deduct. These are costs that are attributed directly to the contract activity. So this gives us 16, 14.5. That gives us contract profit. These are the ones. So that's the contract profit. Normally it's the contract profit. Sometimes we first do the percentage of completion before we deduct expenses. But now we cannot do the percentage of completion because we don't have the total cost. So I'll go ahead and deduct now the other indirect expenses. We just call them allowed expenses. So deduct the other allowed expenses. So analysis of the general and administrative expenses for the year. Office salaries is 815. I hope there's no adjustment. There isn't. So we'll say office salaries. So 815. What? No. At this point, I think the expenses are for the whole company. So we're supposed to combine this. We're supposed to combine and charge it on the combined income statement. So how does that work? We can just end the contract profit there, then we bring down the whole balance. So we can end this up until you examine and you do some. Please add the two. We can add the two and we get a combined profit because these expenses have not been split because they don't belong to any contract. So we have 16,485.5 We add 13, 464.5, and the total is 29. Then I'll put it in the middle here. Come on, make a motion. Doesn't really matter. So hii table hata inaanza kuleta confusion more than light. Put in the middle. Kama ni mwisho. Inaweza kuweka hapa nisema 29, 950. Back expenses hapa. And then the charge to 29,950 is total contract. We say total contract profit is 29.50, then you lessen amount expenses. Now you go to the P&L side. So now you can charge office salaries. Office salaries is renewal of construction license is of course allowable. So renewal of construction license. Renewal of construction license is 186. Pension contributions by the employer is allowable. Pension contributions by the employer is 236. Billboard cost and billboard erection cost, we're going to claim. Investment allowances, purchase of computers and software, the same. Depreciation is not allowed. Will subscriptions due to contractors association subscriptions association subscription to contractors association is 35.68. Subscriptions, interest on overdue loan, interest on overdue loan is 22. Legal fees on defense against claim of breach of contract is allowable because it's just a claim. It's a matter that is not yet concluded. So if you remove the word claim, then it will be legal fees against breach, then that will be disallowed. But if you put claim, it's just an accusation, it's not something that has been determined, so we deduct that legal fee on claim of breach. Claim of breach is 80. Rent for the office premises. Rent for office premises is 614. Utilities become a power. The 245.6. There's a note we need to factor in, note 2. The company estimates that the cost to be incurred to completion, I think this is where we should have adjusted the contract profit. It says the company estimates that the cost to be incurred to complete the contract work would be 150% of the contract cost incurred in the current year. So the contract cost incurred in the current year, for example, for contract X is 6014.5, the direct contract cost. Then you are told the estimated cost to complete will be 15% of that, 150%. So let's get 150% of that. The estimated cost to complete. So you take 60. I think we'll put a note on that. So note 1, call it contract X. Contract X, tutasema contract costs. Contract cost is 6014.5. Then wanakuambia kuna estimated cost to complete. So estimated cost to complete that was 6014.5 times 150%. So that's 9021.75. So you inatupatia total cost here. Yes. Total cost of the contract X will be 15,096.251. Then we'll do the same for contract Y. Contract cost. Contract cost for contract Y is 7435. 7435.5. Ongeza estimated cost to complete. Estimated cost of completion itakuwa 150% total cost. So 7435.5 times 150%. That gives us 11. So we get so total cost down the 18 by 88 7. So this can give us the amount to take of the contract using the percentage of completion method. We can get the amount of profit to take. So the cost to date, for example, using the first formula, cost to date for contract X is 6014.5. Total cost to complete is 15,036.25. Then you multiply with this formula. Then you get the amount to take based on percentage of completion. So you take the cost to date, 6014.5, divide by the total cost of completion, 15,036.25. Then you multiply by this profit, you'll get the amount to take out of what has been the work done to date. So I'll take 6014.5 and divide by the total cost to complete the contract, 15,036.25. Then I multiply by this profit, contract profit of 16,485.5. I'll get this. The amount to be taken so far will be 6,594.2. Have you followed? Yes, you followed. I hope everybody has followed. So that's the amount of profit we take based on percentage of completion. Let me just put this down, 65.94.2. This end of the year, but I can just put that in there. So we want to take profit based on percentage of completion. So the profit we've taken here so far is we've taken 65.94.2. Now we do the same for the other one. So the total cost to date certified for contract Y 7435.5 divided by the total cost to complete 18,588.75. Then you multiply by that profit 13,464.5, and you get 385. That's a easy new. So 65, 94.2 plus 85.8. Total of that will be 90. So from there we subtract allowed expenses from 1198 and get the profit or loss. We are done all the expenses. Kuna expenses going back. We have been left with the investment allowances. I took what to make an investment allowances. So let's put investment allowances. So investment allowances, which assets are there? Note 4, we have a billboard, 200 So billboard will be 202 times 10%. That's 20.2. Purchase of computers and software. Software was 30, so computers are doesn't really matter, but the mass could have been split. So 210 minus 30 is over 90. 2 over 90 minus 30 over 90. You get 25%. It's 45. Then we have software. It's 30 and 25%. That's 7.5. So that could give us the profit or loss. We'll add the total expenses, subtract from the total income. So we deduct here 30, 40.08. It's 939.92. Oh, it's not taxable profit, we have other incomes. Tunabakisha sana na other incomes. Hii ni ya contract pekee. Hii ni ya profit from contract activity. There were other incomes which we need to name. So you bring in other incomes like you find them in note 5. Interest from Upland Bank is already gross. So you say add interest from Upland Bank. The amount is already gross, so doesn't need conversion. So interest is 348.8. Then you have interest. So a dividend from Lima Cooperative Society again is gross. Dividend from Cooperative Society is half twice. So bring in dividend from Lima Cooperative Society. So we'll add dividend from Cooperative Society. The Cooperative Society is called Lima. Have the 360. Dividend from Lima 360. Royalty income is net, so you must convert to gross. Royalty income withholding tax ni rate gani? 5%. So wakisema net, ile imebaki ni 95. So na divide 95, you multiply by 100. So you have got so we take royalty income of 695 divided by 25 to get the gross. Okay, and then say the gross first. 695. So convert that to gross. Get 791.57. This should give us the total tax of the food. Yes. Material sales. We have subtracted material sales because this is an income, specific income. No, because their work is not selling materials. We simply exclude it from the stock of materials because that's a direct cost there. But that's part of the cost that was not utilized in contract. Why? So you just remove the costs from it. So the material went elsewhere. It was not used there. But you can not include it as part of taxable income. So you can get the total taxable income. So from contract is 8939.92 plus 348.8 plus 360 plus 731.57. Total taxable income is 10. 380. Then we are told compute the tax payable. So the tax payable is corporation tax. Corporation tax liability is 30%. Then you lessen the rolling taxes. Lessen the rolling taxes, will lessen the rolling tax on interest from upland border. The rolling tax is 15% of the gross amount. 348. The dividend from Lima Cooperative. So dividend from a farmers cooperative society, the withholding tax is at the rate of 15%. Or for allowable expenses, you're getting 2,342,000. Let's see then. And you guys up on the pattern. You told this allowable expenses is wrong. It's really wrong. Okay, let's go back. So it's 2,352,000. We add the rest. The result here is more. So deduct the withholding taxes. The withholding tax rate for royalties is 5%. Any question? So we can do one more question. I think it's in November 2019. Superman equation 4, question 3, November 2019. If you can do for November 2019. Question 4 of November 2019. Question 4 of November 2019 is on page 48. Page 48. So November 2019, question 4. November 2019, question 4, part A says this: one-stop border should be one-stop border control for some adjust posts are fairly recent cross-border trade initiative. So even this question is from that topic on cross-border trading. I feel we should just answer it because it's theory and you can digest and understand. So one-stop border posts are a fairly recent cross-border trade initiative which have significantly changed the way neighboring countries conduct their business with each other. Required, explain the meaning of one-stop border posts, summarize 4 benefits of one-stop border post, then B, describe 4 functions of tax agents. So let's start with one-stop border posts. What's the meaning? One-stop border posts, in brackets OSBPS, one-stop border posts, in brackets OSBPS. So we say these are a trade facilitation. These are a trade facilitation tool. These are a trade facilitation tool at common borders. These are a trade facilitation tool at common borders to promote a coordinated and integrated approach. To promote a coordinated and integrated approach. To promote a coordinated and integrated approach to facilitating trade. To facilitating trade movement. To facilitating trade movement and improve security. To facilitate trade movement and improve security. And improve security. And you say these combine 2 stops into one. These combine 2 stops into one. These combine 2 stops into one for national border control, functions. These combine 2 stops into one for national border control functions in a shared space, for exiting one country, in a shared space for exiting one country, in a shared space for exiting one country and entering into another. In a shared space of entering one country, exiting one country and entering into another. Then Roman 2, benefits of OSBPS. Benefits of OSBPS, or OSBPs. Benefits of OSBPs. The first benefit, it harmonizes border control regulations. It harmonizes border control regulations and procedures. It harmonizes border control regulations and procedures, which leads to faster and more effective, border control mechanisms, which leads to faster and more effective border control mechanisms. Another benefit, there is a reduced number of stops. There is a reduced number of stops by consignments. There's a reduced number of stops by consignments. There's a reduced number of stops by consignments at border posts. There's a reduced number of stops by consignments at border posts. Since border control activities are at a single location, since border control activities are at a single location, location, hence there are no repeated clearing procedures. Hence, there are no repeated clearing procedures. Hence, there are no repeated clearing procedures. Next benefit, it enables joint technical training. It enables joint technical training. It enables joint technical training of border control officials. It enables joint technical training of border control officials from different countries, to ensure common understanding, of border control operations, Next advantage, there is improved and increased free movement. There is improved and increased free movement of persons. There is improved and increased free movement of persons and development. There is improved and increased free movement of persons and development across bordering countries, Next, there is improved predictability. Of border and transit procedures. There is improved predictability of border and transit procedures. There is improved predictability of border and transit procedures. Since one does not deal with border officials separately, then finally, reduced operating costs due to reduced time and turnaround process. If one deals in several countries, if one deals in several countries at the same time. Then B, functions of tax agents. The first function, to prepare and submit tax returns. On behalf of the taxpayer. Next function, liaise to liaise. Liaise and communicate with the revenue authority. On any matters and issues relating to a taxpayer on any matters and issues relating to the taxpayer, on any matters and issues relating to the taxpayer, e.g., where the taxpayer has to file a notice, where the taxpayer has to file a notice, where the taxpayer has to file a notice of objection, next function, to advise and represent taxpayers on any tax matters, to advise and represent taxpayers on any tax matters, to advise and represent taxpayers on any tax matters before the commissioner or the tribunal, before the commissioner or the tribunal. Lastly, to deal with any other matters, relating to tax, to deal with any other matters relating to tax on behalf of the taxpayer, to deal with any other matters relating to tax on behalf of the taxpayer. Then part C, Benita Contractors Limited operates in the construction industry. In November, the company won a tender for the construction of 2 projects, a hospital and office complex. Construction of the projects commenced in January. The following details relate to the 2 projects for the year ending. So transactions undertaken during the year: opening balance of materials, food, wages and salaries, plant, written down value, cost of work done, value of work certified to date, transactions undertaken during the year, materials delivered to site from store, from supplier, plant purchased at cost, subcontractors fee, consultancy fee, inspection fees, salaries and wages, head office expenses, materials transferred out. Then we have material sales. Your material sales yenyu iko. Do you have any figure? No. Sio tutatatizika. Why don't you guys download the original paper? Kwa Kasneb ama kwa Somea Kenya, because sasa hii inahitaji, wacha nijaribu kutafuta basi pengine. Tulikuwa tumefika gani? Tulikuwa tumefika materials transferred out. Yes, material sales ni 22 million. So kwa sababu ni thousands of shillings, naeka 22,000 Material sales ni 22 million. Hata iko pale juu. 22 million. Then kuna plant lease charges 400 and 500. Direct expenses 3 million, 2 million. Cash received from subcontractor 300 million and 600 billion. Cumulative value of work certified as of December 700 million and 860 million. Value of work uncertified in the year 30,042. Balance carried forward at the end of the year, material on site and accrued wages. Additional information, consultancy fees for the hospital projects include 40,000 prepaid in the year 2019. Wear and tear allowances, which we are now calling investment allowances, and we don't have a rate of 12.5%, so we use 10%. Direct expenses accrued not reflected above were as of December 2018 for the hospital project and as a general in December. Required as a schedule showing the taxable profit and tax payable if any by the NITA contractor. So we prepare a schedule for the taxable profit. Actually, we'll prepare a contract account to get the taxable profit or loss. So we'll prepare a contract account. So we want to prepare a T account for the contract. Then we'll debit all the direct costs there. So Maisha Memo Insurance Company, so let's prepare a contract account. Huh? He needs insurance company. That's hapa. Hivi Benita. I'm looking at the wrong question. Hata ile hivi inaitwa Benita. So this would be hospital. So we'll start debiting the direct costs, beginning with direct material costs. So material, you have a number of entries. Opening balance, I'm looking at hospital project, is 6,000. Then you have transactions during the year. Material delivered to site from storage, 10,000. From supplies, another 100,000. Then you have materials transferred out of 10,000. You have material sales, is not there. Then you have balance carried down, 40,000. So you need to summarize all that and get just one item, one number for materials, and you put there. So either you prepare a T account for that. You can prepare a T account, or once you get used to it, you can still adjust without a T account. Right? Material sales for hospital project is 0. It cannot be 0. Material sales for hospital is negative, and for office complex is 22,000. Yeah. So I will show one T account. Then if you like, you can use a T account, or you can just work out the numbers. But this is how it works out. Right? So we have materials. For hospital project. Sasa opening, unajua hii ni stock account. Opening balance ni debit 6,000. Nasema balance brought is 6,000. We are working with just one account kwanza, you are hospital. So balance, opening balance is 6,000. Then kuna transfers. or deliveries. Kuna deliveries, una debit hapa. Deliveries, wanna deliver from store 10,000. Ongeza hapa. Then kuna deliveries from supplier. Nasema ni another 100,000. That's additional materials. Then wanasema kuna materials transferred out. Hiyo lazima ucredit. Utapeleka hapa unasema transfers. So material transferred out ni kama ngapi? 10,000. Transferred out ni 10,000. Alafu una balance at the end of the year. Material on site na baki ngapi? 40,000. So unasema balance. Carry down 40,000. So I will close this, just balance it off. The balancing figure is what I take to the contract account. So if I add this, I get something like 116,000. And this is 116,000. The difference, 116,000 minus 50,000. You need to debit as cost of materials. Minus. So it was 66,000. You know, our contract account. That's around 66,000. That's how you get the material cost. So from there, you know, put your contract account, you know, debit you directly. In the contract, you know, you open some materials. 66,000. We can get for office complex the same way. Hii sasa tutatafuta tu directly. Opening balance ni 4,000. So unaweka 4,000 kwa calc. Hii imeenda kwa debits, ndio? 4,000. Then transactions during the year. Delivered from the store ni 14,000. Add 14 plus 14,000. Unit delivered. Plus from supply another 128,000. So we add 128,000. 128,000. Then transactions during the year, material transferred out is 17,000. You minus. Unit credit 17,000 transferred out. What else? Material sales 22,000. You subtract 22,000. What else? Material left on site at the end of the year ni ngapi? 50,000. So minus the balance at the end of the year. Inabaki 57,000. So you do material cost. So either you can just work with the figures, alternatively, unaweza prepare T account. So direct cost of material tushaweka. Then hiyo ni materials. Next wanakuambia kuna kitu inaitwa salaries and wages. So tuanze na hospital project, utachukua the figure ya the current year's transaction kwanza ni 120,000. Umeona hiyo? The transactions undertaken during the year. Under salaries and wages, hospital project is 120. So we put 120,000 in the calc. That's 120,000. Then, sasa unachukua ile figure at the beginning of the year. Hiyo ni accrual, but in January, not December. So accrual in January unafanyaje? Una subtract. Hiyo ni opening balance. So una subtract accrual ya minus 1,500. Then you add accrued at the end of the year. Accrued at wages at the end of the year ni 1,000. So plus 1,000. You need accrued at the end of the year. So the difference is 119,500. So you know the upper is 119,500. Then you can get salaries and wages for the office complex. unaanza na transactions during the year. Salaries and wages ni 180,000. 180,000. Opening accrued amount ni ngapi? 1,200. So minus 1,200. Closing accrual ni 2,000 plus 2,000. That's 188,000. So because of time, I'll let you debit the remaining costs. Ama tu debit ingine moja. Hii ilikuwa, that was salaries and wages. Sasa wacha tulete investment allowance on plant. Tutatumia rate ya current, which is 10%. So to bring in plant investment allowance on plant. Sasa plant opening balance ya hospital ni ngapi? 190,000. Then look at transactions during the year. They have plant purchase. Tumeona hospital hakuna, ni dash. Plant purchase ni sinivo, ni dash. Hakuna plant purchase. There are no additional transactions for plant. And that's it. So we will get 10% of 190, which is 19,000. Yeah? These charges is different. They are their own plants, their own assets, and the ones they are leased. That's a different matter. Then we get plant for office. Plant ni ngapi for office? 150. Angalia plant purchase during the year ni 120. 150 plus 120 to 270. 10% is 27. Easy in the direct cost. Cost of work done, you don't need that. Value of work certified, data for credit. But how do you do it? You'll get the change. Kwa mfano, look at cumulative value of work certified at the end of the year. For hospital ni ngapi? 700,000. Cumulative. Subtract value of work certified in January ni ngapi? 200,000. So value of work certified by the architect is the payment they're expecting. So you credit that of work certified. You payment they're expecting from the architect. So for hospital, it's 500,000. So at the beginning of the year, cumulative was 200. By the end, it is 700. So 700 minus 200. Then we do the same for office. Value of work certified in 860 minus opening balance in January of 160 nabaki 700. So you need income. So you continue with the other expenses. We cannot finish now, but we'll go through the question. So you'll get all the direct expenses in, and that will give you the contract profit or loss. So you can try that. Try and push it to the end.